Can I ask you, Max, about FX markets and the dollar and the role of the dollar here? I was reading some research by Bloomberg Intelligence saying that platinum, copper, silver, these are the metals that have the strongest negative correlation in their view, or by, thanks to their analysis, to the dollar. What is your expectation there? Because that takes us into, FOMC, Fed expectations, what the dollar does. How much are you thinking about that?
Yeah, we're certainly thinking about that. The House view is quite out of consensus in terms of Citi Research's House view. We've got 5 Fed cuts this year, lower real rates into the end of the year, early next year. And that's certainly going to be, we think, the backbone of the next move higher in gold, right? So, gold's probably the one that we think is most leveraged to that out of consensus view. We've got it going to $3,000 over the next 12 months.
So
oil
lower,
gold higher.
5 cuts and the market is only pricing in 1 right now. Where does that leave gold? And I was going to, come on to talk to you about gold prices.
Yeah, I mean, it certainly would make us less bullish, but the underlying drivers of gold are very physical at the moment, so we feel like the support for these gold prices, obviously gold's broken the relationship with real rates of late, and that's been all about colossal Chinese retail demand. I mean, off the charts. And China's, in my career, I've never seen China on the bid at the highs. And the dollar notional that they're putting into gold is, we ballparked it, it's roughly 40 to 50% of what would have otherwise gone into property. It's a big shift from property spending into gold in retail in China. It mopped up about 2/3 of ex-China mine supply in the last 3-4 months. So, really absorbing all the mine supply, that plus the central bank demand, and there's nothing left for the jewellery market.
And just I know Kriti's coming in, but does that change, that dynamic in China around gold? Does that change? Do you see anything that changes that? Yeah,
I mean, that is the biggest downside risk to gold for us, is that ultimately the government controls the quotas on the imports, and I mean the imports aren't necessarily, the quotas aren't published, and they could dry up if the government becomes unhappy with the transfer of wealth from perhaps consumption and retail into physical gold.
So what's the way to invest in gold then right now? If I'm an investor looking at gold as potentially that central bank hedge or whatever your bull case might be, do you do it with the physical demand? Do you call your folks in Asia and say, let's stock up, or do you do it via the liquid ETF markets of the States? How do you access it? How do you get to it?
Sure. I mean, there's equities, ETF, the commodity.
Sure, but what's the most lucrative
Yeah, I mean, CFTC, I always worry about getting these questions because I can only answer on the commodity side. I'm not allowed to give a call on equities. Certainly not allowed to talk about ETFs. But look, on the commodity side, we've got, I would say overall the action in commodities has been almost 95 to 99% copper from a client activity perspective, from what I hear about and I see. It's not so much been in gold. I think there's a lot of room for gold. I mean, frankly, many people, including ourselves, were scratching our heads as to what the new drivers were, and now they've become clear that it's China. I think we're going to get a lot more interest in gold because people can kind of get their heads around it.